Good evening, ladies and gentlemen. This is Business at 9 and I'm Sumita Kari. This show is about getting in all that's happening in the world of politics, business, markets and finance. So let's then begin with some news that's coming in on account of the rupee, which has hit a record low level versus the dollar as tariff uncertainty continues. Rupee has hit an all-time low of 88.45 today and closed at 88.44 versus the dollar. Rupee has depreciated overall 3% so far this year against the dollar. My colleague Ankur Mishra is now joining in with the details. Ankur.
Yes, rupee has plunged to an all-time low of 88.47 and that has happened after the renewed fears of the traders regarding India-US trade deals. Remember, there is no concrete step which has happened so far, although there were statements which were made on Wednesday, which was somewhat comforting, and therefore you would have seen the movement of rupee. There was some recovery which was seen in the Wednesday trade, but as far as Thursday is concerned, once again it plunged to an all-time low, and it will be interesting to see whether or not the Reserve Bank of India actually intervenes in the market, because lately the intervention of Reserve Bank of India has been less in dollar rupee. But for sure what has happened so far as traders are concerned, the importers have been buying the dollars, and also the data which is coming in from United States is also keeping the rupee trade interesting, because the expectation of CPI was there on Thursday, and therefore the dollar buying was seen. Also, one more factor which has been communicated by the traders has been the strengthening of the dollar index, and if you see in last 1 week or so, that has strengthened, and therefore the rupee weakening continues. But rupee is not the only currency which is weakening as far as the Asia basket is concerned. The other peers are also having a similar kind of trend. All eyes will be there on the next week's Fed policy outcome, because the traders are anticipating a 50 basis point cut there, and therefore the dollar index will be washed out from that lens as well. But all in all, interesting point will be on Friday whether or not when the rupee has touched an all-time low of 88.47, whether or not Reserve Bank of India will intervene in between.
Right, Ankur, do stay on with us as we talk about some of the other stories that are coming in, but definitely it remains to be seen whether the rupee is going to record any upward correction, given the fact that there seems to be some truce that's been achieved between the United States and India with respect to the trade deal, as both sides are looking at completing the first tranche of the bilateral trade agreement by fall this year. But moving on to the other story now, as sources tell ET now that long-term FNO contracts are not part of SEBI's board meeting. Ankur Mishra, my colleague, joining us once again. Ankur, so if FNO contracts are not going to be part of the SEBI board meeting, what can investors expect?
Yes, sources say that longer-term FNO contracts are not part of SEBI board meeting agenda. Remember, SEBI is going to meet on Friday, and there are several lists which may be discussed in the board meeting. But as far as FNO is concerned, that is not part of the meeting. In fact, remember, SEBI chairman had earlier mentioned saying that there is a need for longer-dated FNO contracts to aid hedging and long-term investing, and therefore there will be a discussion which will be done with the industry, as is the case with SEBI for any of the new rules which it aims to bring, or any of the changes which aims to do. There will be a consultation with the stakeholders, and after that a consultation paper may come which will have the details of whether or not the weekly expiries need to remain, or they phase out, or there needs to be more longer term contracts. But regulator was of course concerned with the losses which actually retail investors were making, and therefore there were several steps which were taken by the market regulator already to fizzle out the kind of market manipulation. These kind of allegations were there earlier, and therefore to address those concerns there were steps which were taken by the market regulator earlier from October 1. But For now, as far as the longer date FNO contracts are concerned, yes, regulator has mentioned that they are in discussion, they are consulting the stakeholders, but all will depend after the consultation paper which comes for a longer dated FNO contract. But for now, it is not part of SEBI board meeting agenda.
All right. Thank you very much, Ankur, for bringing us all of those details. All eyes will be on that very crucial SEBI meeting and the outcome of that meeting, most importantly, from an investor's point of view. But now let's shift our focus to some news that's coming in from the auto world. Well, particularly the Siam annual convention, which was underway in New Delhi. This was a big-ticket auto event decoding all the big trends in the mobility sector. And my colleague Nivedna Prabhu caught up with Nitin Giraffe from Cummins India, in fact, Siam's past president Pawan Goenka, on how do they expect the auto demand this year to pan out, particularly with respect to the GST changes that have been introduced by the central government.
I think as well as the hydrogen internal combustion engine that we are producing at our Jamshedpur facility is concerned, I think it's made for both India as well as for export. And I think the technology is at a stage where it is being proven in a real duty cycle right now in India and both globally. This year we'll be producing a few engines for MNRE project with our partner OEM. And also we'll be supplying a couple of engines globally, again for trying out the real duty cycle applications. So I see that, you know, as these technologies are proven over a period of time, then we'll have the ability to scale up. But I think we have a pretty good installed capacity at our plants and the value chain is very well established. Reform has come at the right time for them, and it is going to prove as a, let's say, a very good impetus to the industry in terms of volumes, and also going to give a great deal of relief to the fleet owners. I think next we have a visibility for next couple of months and all, at least for the financial year, and we see that, you know, I mean, otherwise the industry was flat and, you know, maybe negative 1 or 2%, but with this GST reforms, we see some positivity in volumes as well as the consumer sentiment. So we are very positive about it. Platform which we announced during last auto show in Delhi, and that is called HELM, HELM. This is high efficiency, low emission and multiple fuel platform. What does it mean is it with small changes in the architecture, it can work on diesel. It can work on LNG, and it can also work on hydrogen. So we have the ability to convert these engines as per the customer demand. And the good thing about this engine is they'll deliver the same efficiency in terms of power and torque. So the customer will not, let's say, compromise on the performance. Always have believed in improving the efficiency and making our engines more, let's say, affordable as well as environment friendly.
Kind of reduction that has happened on GST, which will probably reduce prices 10%, 12% for most vehicles, is going to have fairly large impact on demand, on the assumption that automakers pass on all the benefit to the consumer. Clearly that will happen in the beginning because the government is watching it very carefully, but it has to sustain and remain that way so that the prices are 10-12% lower with the original, with the older base. And that's a fairly large, fairly huge reduction in price. And that probably takes the price back almost 6 years in terms of the increases that happen every year.
Correct.
So therefore you can imagine the affordability of vehicles goes up significantly. And hence many people who are sitting in the edge to buy or not to buy would now say I can afford to buy. Therefore I would expect a fairly significant increase in demand.
T20 rollout, also given what Union Minister Nitin Gadkari was saying at today's event. There's one aspect of what the vision for the government is, but are there challenges as well as far as this is concerned, and from an industry standpoint as well? How are you viewing that?
E20?
Yes.
You see, there are three different aspects that one has to look at.
Okay.
The first two, nobody can argue. The first one is what it does to our crude oil import bill. And clearly it goes down by 20%.
Yeah.
If you have 20% ethanol, you have 20% less import, right, on a like-to-like basis. That nobody can argue, and that nobody can say it's not a desirable thing. It's very desirable, and that's happening, and we are all very happy about it. The second one is what does it do to prosperity for farmers? And clearly this is a new area, business that the farmers are getting through ethanol blending, and that also is very good. The data available to say that how farmers are benefiting from it. There is no question about it.
Yeah.
The third aspect is what gets discussed is what is the impact on the consumer.
Yeah.
And the two concerns that are coming up, one is about the fuel efficiency, and second is about the corrosion that could be happening. I don't know how corrosion thing is coming, but it's too early for it, because even if it happened, it will happen late in life. There may be one or two or three examples here and there you can always find. I don't have enough data personally to know whether there is a loss of fuel efficiency at that level. But my take is that whatever it might be, it's a matter of the OEMs looking into it and resolving it. It's not inherent, it's not fundamental to E20.
Yeah.
And therefore, I'm sure that the OEMs will be able to resolve it. And eventually, if you look at all three aspects together, it's a good thing to have. One thing that I'm also hearing is that the cost of E20 is higher than petrol. That has to come down. I don't know what's causing it and why it's happening, but that has to come down, because one of the selling points for E20 was that it will be lower cost than petrol. The government now is going at a very sort of fast-paced on recognizing that not just in automotive industry but everywhere, technology is going to play a big role. We cannot get to our Viksit Bharat 2047 if we are not a country that is innovating. Right? So having recognized that, the government is putting in a fairly large trust on technology through the ANRF fund and many other initiatives that are there. And therefore, I would think that the industry will align with that and will do more and more.
When industry leaders weighing in on what the GST demand booster really means, the GST change that's going to ring in from September 22nd, what does that really mean for the industry? And of course, industry honchos also commenting on demand for the rest of the year. But let's stick to that point about rising demand. But in the two-wheeler segment, ladies and gentlemen, TVS Motors head commuter and EV business Anirudh Haldar, he spoke to my colleague Jude about how the company is looking at growth over the next couple of months. Let's listen into what he had to say.
We have the widest portfolio across all two-wheeler product categories, and the back-to-back launches happen because there are different segments, and for each consumer set, it is our decision to bring something fresh and new and different in time for the festive season, and we've done that across all our segments, whether it is electric, whether it is our premium bikes, whether it's the commuter motorcycle, and today it is the TVS NTORQ. And so there we ensure that we always have something fresh and new for our. Now coming more specifically to the TVS NTORQ, I think this is a segment, as I said, has grown very big. So if you look at the growth pattern over time, the total two-wheeler industry has been growing at about a 2% CAGR over the last 3 years. This entire scooter industry has grown at 6%, and the sporty scooter has grown at 11%. So you have a 2%, and 3x of that is scooter, and 2x of that is happening at the sporty scooter. So it's almost 6x of that of the two-wheeler growth. So it's a major growth driver of the segment. So this is a segment that definitely deserved a lot more of our attention. So which is why now we will have the NTORQ 125 and the NTORQ 150, both in that segment, giving us a very, very strong and prominent position in that segment. So with NTORQ, we had redefined the segment to actually give birth to it, and we have a very prominent leading position in it. We hope to consolidate that and expand the market so that it becomes far better. So right now with scooters, we're already, if you take electric and ICE scooters put together, we are right now at about 39% of the market. We are hoping to really grow that forward, and with sporty scooters, dominate it altogether.
All right. So that's Mr. Haldar essentially speaking about the kind of demand surge that he's going to see in the two-wheeler segment. Remember, ladies and gentlemen, two-wheeler segment is that one segment which has seen some softness so far as demand and growth is concerned. But there are hopes which are building up given the government's GST change intervention that's been brought about. So Overall, lots of action through the day at the Siam event here in New Delhi. We've seen a whole gamut of conversations on the latest issues, policy and industry related. Let's once again go across to my colleague Nivetna Prabhu, who's joining in with the key takeaways from the Siam event. Nivetna?
Many dialogues for only one destination, the national capital, as the 65th Siam conclave was held in Delhi. Let's talk about the fact that this was an opportunity for the industry to be looking at different facts that are happening in the automobile industry, but it's also an opportunity to see how companies are really navigating this. The number one takeaway as far as this is concerned is the GST rate rationalization. We know that this has been a welcome move, and everybody has spoken about how this has been a great policy push from the side of the government, but they've clubbed it with how this is essential timing. It's a bonanza timing. A lot of them going on to call it Diwali before Diwali, and they're expecting the sales to do really well, given the fact that we're just not talking about the rate rationalization, but also that how consumers will now have that opportunity to really rejig their budget with that particular discounts that they will be getting. But let's also talk about the fact that one thing that was put on focus was the safety ambiguity of it. So there's a lot of conversation about that. In fact, Siam President Shailesh Chandra spoke about how FADA as well as Siam has put forth that dialogue as to how they're going to navigate, but it remains to be seen how they're going to overcome that. But let's also talk about how Union Minister Nitin Gadkari, who was present at the event, spoke about sustainability as well as safety. When sustainability comes into question over here, he touched upon how this is a vision with the E20 rollout. Is there criticism? Yes, but that's being navigated as well. Essentially, how that would come together for the industry as well as the sector. Now, that is, of course, something that is being looked at on a bigger roadmap. But let's also touch upon safety quickly, because Nitin Gadkari spoke about how road safety facilities are very important, and they want to do more to ensure that particular education is meted out to citizens. More importantly, because the minister believed that at some point that human behavior is also problematic in terms of how this has been a challenge for them to really become successful, at least in bringing down those fatality rates. But speaking about other conversations that have happened here, let's also put into perspective that the EV story, the India growth story, that everybody was here at Siam spoke about how this is an opportunity not just for India to really look at that particular vision, but also in terms of exports, what it means for the current synergy for that vision to come together, and what of course lies ahead. Now, all in all, it was a power-packed event, many dialogues, many conversations, many visions that have been put forth. Now, how is that going to navigate, and ultimately what will that pan out to be? That remains to be seen.
Well, multiple themes related to policy and industry were discussed at the Siam convention, and that was my colleague Nivetna getting us all the top highlights. Meanwhile, let's switch our focus to the European Central Bank, where news is coming from. Well, the bank has held interest rates steady as economic uncertainty persists in the wake of U.S.'s Donald Trump's aggressive tariff agenda. The ECB has predicted its GDP to grow at 1.2% in 2025, revised up from the 0.9% that was expected in June. In fact, growth projection for 2026 is now slightly lower at 1%, while the projection for 2027 by the ECB is unchanged at 1.3%. On that note, let's listen into what the ECB President Christine Lagarde has to say.
To economic growth have become more balanced. While recent trade agreements have reduced uncertainty, a renewed worsening of trade relations could further dampen exports and drag down investment and consumption. A deterioration in financial market sentiment could lead to tighter financing conditions, greater risk aversions, and weaker growth. Geopolitical tensions, such as Russia's unjustified war against Ukraine and the tragic conflict in the Middle East, remain a major source of uncertainty.
And let's now switch our focus to the United States, where some numbers related to the August US CPI annual inflation have come up. In fact, the US CPI annual inflation has risen 2.9%. That's largely in line with expectations of 2.9%, while the core CPI inflation has increased 3.1% year on year, matching the forecast for a gain of 3.1%. On a monthly basis, also, the numbers met the street's estimate as US CPI came in at 0.4% versus expectations of 0.3%, while US core CPI has come in at 0.3% versus the estimates of 0.3% itself. US weekly jobless claims saw a jump, coming in at 2 2,63,000, which is higher than the 2,35,000 estimate that the street was penciling in, analysts were penciling in, and up 27,000 from the prior period. But on the back of those numbers, how's the Wall Street reacting? Well, the Wall Street is currently trading in the green. The S&P 500 has touched new highs, and there are rate cut hopes that are building in despite higher August CPI numbers that have come in, and we've talked about them just now. The Dow Jones has also surged over 450 points in trade, but let's take a look at some live levels that are coming in. The Dow Jones is up by 500 points. In fact, it has crossed that 500 points mark. The Nasdaq is up by close to 150 points in trade. The S&P 500, like I stated, at an all-time high, is close to 50 points in trade. All of them trading in the green territory as of now. And definitely this despite the fact that the August CPI numbers, they have pretty much been along expected lines. But there are hopes that are building in as far as a rate cut in the month of September. As far as that is concerned, we'll have to see how that pans out. It's going to be whether it's going to be 25 bips or 50 bips. All of that will be closely monitored and watched over the next couple of days. But let's head back to India and see what's happening, as India is expected to release its inflation print tomorrow. Let's go across to my colleague Varun to find out what analysts are penciling in on the same. Varun, so what's the larger view as far as inflation numbers for India are concerned? Is India going to be steady as far as its inflation trajectory is concerned?
Well, so as per Reuters poll, the CPI numbers for the month of August is expected to come at around 2.1%, and the wider range is 1.35% to 3%. Now, this would be the first month after 9 continuous months of actually decline in CPI. So this time we are seeing an increase in CPI from actually 1.55% last month to around 2.1% in the month of August. Although it would be the 7th continuous month wherein the CPI numbers would be below the RBI threshold limit of 4%. But yes, we are seeing an increase in the month of August at least. Now, what would lead to the overall increase in the CPI numbers? So it would be the base effect, because if you look in the base, the overall vegetable prices were very high, and the base will actually fade away in the month of August, and that's the reason you will see an overall increase in the CPI numbers. Now, the vegetable prices on a month-on-month basis also are expected to rise around 2.5%, and this would be led by around 26% month-on-month rise in the prices of tomatoes. Also, the prices of cereals, they are expected to go up on a month-on-month basis, led by wheat, and the prices of pulses are likely to decline in the month of August on a month-on-month basis as well. Also, edible oil, they will see the price of edible oil, they have seen an uptick in the month of August, so even that would aid the overall CPI numbers. Now, the core CPI, that is expected to inch up to around 4.23% in the month of August, and this would be largely on account of higher gold prices. So there are several things that would lead to increase in the CPI numbers, especially it is a base effect that is fading off in the month of August, and that's the reason after 9 months of continuous decline in the CPI numbers, this time the CPI numbers will increase, and 2.1%, that is a Reuters poll.
All right. Thank you very much, Varun, for putting that entire data into perspective. Essentially, analysts are penciling an elevated number for the month of August as far as inflation print for India is concerned. We'll be decoding that story tomorrow with the experts all day on ET Now. To stay tuned with us. Meanwhile, for now, it's a goodbye and it's a close on Business at 9. Thank you very much for tuning in.